Hi, everybody. It's Charlie from Lifetime Income from You and Cannon Financial Group. And we're going to do a second quarter update today and take a look at fixed interest rates. So let me share my screen and we'll jump right into it. Here's an article from Yahoo Finance, Stock Market News Live Updates. Stock fall after S&P's worst first half since 1970. This is by Emily McCormick, one of their financial reporters. And so here in the middle paragraph, you can see the S&P closed out its worst first half since 1970, and we're down 20% so far in 2022. The Dow is down 15.3 so far, its worst first half since 1962, and the NASDAQ 29.5%, which is its worst first half. And so really we're having our worst NASDAQ since the Y2K problem in 2000 through 2002. So take a look again. Here's the SPX off of Bloomberg. That's the proxy for the S&P 500, down 20.7 year to date, down 11.5% over the last 12 months. And if we pull up the chart, here's the 5-year chart. Here's where we're at today at 37.85. And here's the low of COVID, which is 23.04. A lot of economists believe that as we continue to raise interest rates, we're going to see this 23.04 again. That's a 37% drop from where we are now. And so that means we've already gone down 20% from our highs, and there's another 37% perhaps there. And so that's really what you've got to guard against. I'm reminded of the story of Bill Buckner. If you watch baseball, everybody remembers Bill Buckner for one thing. It was missing that ground ball against the Mets in 1986, right? But did you know Bill Buckner had more hits than almost 70% of the Hall of Famers? In fact, he had 500 more hits than Joe DiMaggio. He truly was one of the greatest players ever. In fact, he's probably in the top 5 of all the players who are not in the Hall of Fame. But anybody who's a baseball fan can remember is that he missed that one ground ball in 1986. Well, that's what can happen to your retirement plan. It grew and grew and grew all the way through your working years, and you really admired how much it went up. But if you live through another huge drop right here, all you're going to be able to think about is that one mistake. And it's not the mistake of the stock market, because especially if you've come to my live events, you've seen that we do have bottoming out like this almost every 10 years. It's your mistake if you don't do something ahead of time. And so our next job today is to take a quick look at where fixed rates are. And so that's called a MYGA, a multi-year guarantee annuity. Right now, you can get a 7-year fixed rate. Here's by an A company, the Standard. It's right here in Portland, Oregon, at 4.25%. But you can see that at 5 years, you can get North American at that same 4.25%, and some other companies. So that's really the sweet spot right now. Money that you can put away for up to 5 years, you can get 4.25%. And that's really the sweet spot. If you need a shorter duration, Guggenheim just moved to 4% on their 3-year. And so you can get between 4 and 4.25% in that 3, 4, 5 year time frame. I just worked on something for someone where they were going to annuitize, but I showed them by waiting 3 years and being 3 years older, they could gather 4% for the first 3 years guaranteed. And at the end of 3 years, we could annuitize that same bucket of money at a much higher rate because it gave them time to get a little older. And so before you do anything, you should take a look at all those different types of options. So I'm Charles Cannon from Lifetime Income for You. I hope you enjoyed today's video and podcast, if you would please push like and add my channel so that you get every single video I put out. I'm going to start doing these 2 days a week so that you'll often have a new update. Thanks and have a great day.